This is Bloomberg Businessweek Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Businessweek Daily with Carol Massar and Tim Stenovec, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
Definitely Friday here at Bloomberg headquarters.
Why do you say that, Carol? Why do you say that?
Getting sass from our producer, Ari.
You're giving him sass.
I'm never giving sass. I don't give sass. I just get sass.
Okay.
All right. It is Friday, October 24th, 2025. I feel like October was like whew, just flying past us. We got the S&P 500 hitting a high today.
Yep, 1% on the S&P right now. The NASDAQ Composite up 1.3%. We're going to have much more on the trade with Alexis Christoforous in just a minute. But a cooler than estimated inflation print that supports a Fed cutting rates. We're all in on that. Michael McKee is here. We're going to speak to him in just a minute.
Yep, pressure's on, Mike. We're going to talk about the data and the Fed policy. We're also going to check in with Katy Kaminski at AlphaSimplex. We're going to talk Fed, too, with her, Treasury trade, a lot coming your way.
Drew Matus, Chief Market Strategist at MetLife Investment Management, joining us on the K-shaped economy and how the consumer is not okay.
I love this. We're going to dig into that. Also, in the shadow of regional banking concerns over real estate, we get into opportunistic real estate investments in the distressed sector. We're going to do that with the CEO of Clear Investment Group. So much coming your way. Do not go anywhere. Stay with us on this Friday. First up, let's get a check on the trade and the rally underway with Alexis Christoforous.
Thanks, Carol and Tim. That cooler than expected inflation report has ignited a powerful rally on Wall Street. Investors betting the report paves the way for the Federal Reserve to cut interest rates at its meeting next week. The Dow Jones Industrial Average up better than 1% now, at up 530 points at 47,264. The S&P 500 up 64 points above 6,800. That's a record high. The NASDAQ Composite gaining nearly 300 points, a gain there of 1.33%. Procter & Gamble reporting fiscal first quarter earnings and revenue that beat analyst estimates despite higher costs from tariffs. Results getting a boost from strong demand for its beauty and grooming products. P&G stock up now 0.6%. And shares of Advanced Micro Devices jumping here on a report that IBM can use the company's chips to run certain quantum computing algorithms. IBM plans to launch a quantum computer by 2029, and it announced that partnership with AMD back in August. Shares of AMD up now nearly 7%. And Ford's strong sales pushed the automaker's revenue and operating income well past estimates. Investors here looking past Ford's warning that a fire at an aluminum factory will dent fourth quarter profits. Shares of Ford driving ahead nearly 13%. The New York Knicks sent Zohran Mamdani, the frontrunner in next month's mayoral election, a cease and desist order for the use of the team's iconic logo in his campaign ad. Mamdani ran an ad during the home opener on Wednesday that ended by flashing the team's blue and orange basketball logo with Zohran in place of Knicks. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Alexis Christoforous. That's the Bloomberg Business Flash. Don't mess with the Knicks, Tim and Carol.
No, oops, indeed. That's important IP, that's for sure. All right, Alexis, thank you so much. Yes, we are in a U.S. government shutdown. It's now in its fourth week. Is it 24
days, I believe. Mike, is that right? 24 days?
24?
24 days. But who's counting?
We are.
Well, I'm trying to, but sometimes I forget what comes after.
Well, it's the weirdest thing. It just
number.
feels like nobody cares. But anyway, we should point out, though, in the absence of a lot of official data from the U.S. government, we did get a highly anticipated read on inflation today. It's a bit of a welcome surprise, Tim.
Yeah, that's particularly for several policymakers who are leery of cutting rates further. Here with the data and the market and the Fed implications, we got Bloomberg TV and radio international economics and policy correspondent Michael McKee.
Isn't it kind of wild, though? We're in this shutdown.
Yes.
And I feel like in the past when we've covered it, our coverage shutdowns, we're all over it nonstop. And it's just the weirdest thing.
Well, yesterday, the president tore down half the White House. So
I know.
It's kind of hard to know what to focus on these days. The economy is chugging along, which is probably one reason that we're not seeing as much focus on it, because people are still, we're not seeing big layoffs yet, although a number of layoff announcements came this week. And people are still, their incomes are coming in, they're still spending. If things continue to weaken, then it'll become much more of an issue.
And then we want to talk about an inflation report, too, as well. We've also got another guest with us.
Yeah, Katy Kaminski is joining us. She's Chief Research Strategist and Portfolio Manager with AlphaSimplex Group. She joins us from Boston. Mike here in the studio. Mike, let's go back to the inflationary print, though, and really the focus of it. Look, we don't know if even we're going to get one for this month. We don't, or do we know if we
don't know. The White House suggested that we wouldn't, but
it's not definitive.
It's not definitive.
Why did we get one for last month?
Social Security. It's
because of the cost of living increase.
The cost of living increase is
2.8%, I believe.
Yeah, 2.8%, calculated based on the average of the third quarter CPIs. So they needed this last one from September to be able to put that out, and it legally has to go out by the 1st of November. So
interesting.
That's why we got that.
So not too worried about inflation right now?
No, we're worried about inflation right now.
Oh, okay. I thought this was a softer print.
It was a slightly softer print, but what people were watching for was two things. One is were services prices still rising, and services prices were still rising with a big exception for home prices, the way they calculate it with owner's equivalent rent, and they almost collapsed, down up just a tenth after being up 4 tenths, 5 tenths, 3 tenths for some couple of years. So that could be noise, and it is an anomaly, and we don't know. But if you take that out, then you have still regularly about the same as we've been with the service prices, and then tariffs. Used car prices dropped a lot during the month. And if you take out autos, you still have core goods prices rising. And we saw things like furniture up 0.9%, almost a full percentage point, and other tariffed goods rising in price. So it does show that that's starting to bleed through.
Hey, listen, Katy, we want to bring you into this because, if I look at the Treasury trade over this month, we've seen benchmark 10 years below 4%. It's kind of where we are, although we've had some volatility in today's trade. Bring in your read on the inflation print and what it means for the Treasury trade.
Well, this is a good question because what we've seen is a little bit of jitters around this potential CPI print. But to be honest, bond trends haven't moved that much. They've been up, then they've been back down. So there doesn't seem to be a lot of movement in that asset class in reaction to the Fed. The movement's actually much more in other asset classes like a strong dollar.
Which makes no sense, right? If we're getting lower rates.
Exactly. Lower rates, strong dollar. And then the movements today that are consistent with this CPI move are the equity market just, showing relief about some concerns about not getting rate cuts because of the shutdown, I think.
So Mike, come on in on this. Push it to next week. I mean, does that mean that we might not get rate cuts as a result of the shutdown?
No, we'll get the rate cut. The Fed
there were
has
some folks
no
on surveillance
reason.
talking about 50 basis points this morning. No. Not going to happen.
Who are those
Well, you
crazy
want to get on
kids?
surveillance, you have to be outrageous. If you want to talk the truth, you come on this show.
His name rhymes with Tom Keene.
Yeah. No, we're not going to get 50 basis points. We'll get 25. The question is, will we even have any dissents other than Stephen Myron, who's already sort of advertised he's going to dissent every time?
Unless he gets
50 or 75 basis points or whatever. I mean, that's why they sent him there. But the Fed came into this meeting letting the markets believe in a 25 basis point cut. And there's nothing in the inflation data that's going to say screamingly, you can't do that. So the Fed will just go ahead and cut rates. But I wouldn't put any bets yet on what's going to happen in December.
Katy, you were on surveillance this morning. Tim and I were listening. Were you one of those crazy kids who said 50 basis points? I don't think so.
No, definitely not. I'd say I was surprised, though, because I think the numbers did come in a little bit. I thought they'd come in as expected. So coming in a little better than expected definitely accelerated some of the trends that we're seeing. I do think it kind of relieved the market from concerns. I think the bigger shocks would be if you had any sort of shift in policy. So the less likelihood of a shift in policy is what has kind of soothed the markets right now.
There's an interesting story in the Bloomberg that caught my attention. I'm curious what you guys think about this. The bond market's movements have been suggesting a U.S. downturn for 3 years since 3-month Treasury yields first pushed above 10-year ones. Our right through on this notes, the yield curve's predictive power may be sounding a false alarm this time. This is from Campbell Harvey due to factors such as massive fiscal spending and healthy finances of consumers and corporations. Do you agree, Katy?
I would have to say it is very contextual, because when you look at the inverted yield curve over different periods of time, I think some of the potential inflation and other issues with policy is just kind of not necessarily means that there's a recession right away. So I think it's been sort of a false signal during this market environment.
Yeah, we should mention that Campbell Harvey is the Duke professor who came up with the idea of the inverted yield curve signaling recession. And I think there's been general consensus at the Fed and among economists since we went through the great financial crisis, but certainly coming out of COVID, that it's not reliable now for a whole host of reasons.
So ignore it.
Ignore it, yeah.
Hey, Mike, we're going to be speaking with Drew Matus over at MetLife Investment Management in just a minute about the consumer. Prep us for that conversation, like lay the groundwork here. How is the consumer doing?
Well, I think you advertise it as the K-shaped economy. And that explains kind of where we are with the consumer. But as
we'll hear from Drew, he kind of argues that the K-shape, the top end isn't doing as well as people think.
Well, I think the top end is doing just fine because when you get to the higher top end, you're making all your money off of interest and dividends, and the stock market just keeps going up and up and up. It's the people who are on fixed income and low wages who are struggling now because inflation is still going up, and they're trying to make ends meet and finding it harder and harder. If you've gone to the grocery store lately to buy a hamburger or something like that. So you have this bifurcation, and the question is, how long can people hang out before they start pulling back on spending? And there's anecdotal evidence that they're starting to pull back in some areas already. Then if we get any layoffs, as some of these companies,
we're seeing.
P&G today had good earnings, but by the way, we're going to get rid of 1,800 people.
Hey, Katy, I want to go back to just one, about the idea of what we're seeing in equity markets versus bond markets versus the dollar strength. I mean, I'm trying to, gold, silver rally, then more recently dropping back. Do the market metrics fit together, make sense? They tell one story or no? And if not, then what does that mean?
So this is a good question. I think for me, the question has been, it's been a growth story in equities, having good GDP numbers. So you're seeing that very strong equity trend. But coupled with that, seeing also very strong gold and a weaker dollar has made me feel a little nervous about that. There's a chance that we might have an overstimulation. So low rates, high growth, and you kind of have inflation potential. I think today's print is helpful in the short term. But those are the themes that I'm seeing where there's sort of a hedge out there against, things look good, but, we need to proceed with caution. We could have inflation. We may have issues, especially with a weaker dollar. So this firm dollar is also kind of interesting to me. I think probably the most interesting recently.
All right, great stuff. Great when we can do a double dip with Katy Kaminski on this afternoon. She's Chief Research Strategist, Portfolio Manager with AlphaSimplex Group. Hey, we're going to stay on this. Mike's going to stay with us. We want to bring your attention to something that JP Morgan's Asset Management's Chief Global Strategist, David Kelly, said this morning, too, on BTV on surveillance. Talked about the Fed, inflation, and the K-shaped economy.
I think the Fed's going to keep on cutting rates. It's generally a better than expected report, but I think what it really shows is we have a K-shaped economy, and it's sort of a K-shaped CPI report. It is clear that mainstream retailers don't believe they can pass on the tariff increases right now, and that's what's making this inflation rate a little bit tamer than people feared.
Want to bring in, of course, that was JP Morgan's David Kelly earlier today. But right now I want to add to the mix the senior economist, actually was a former senior economist at Lehman Brothers. We've been talking to him for a long time. We're talking about Drew Matus. He is the chief market strategist at MetLife Investment Management, joining us from New Jersey. Drew, your recent note caught the attention of our Talia Torella about how the consumer is not okay. Walk us through that.
Well, there is a K-shaped recovery or consumer. The upper end is doing reasonably well. But the question is always kind of what's the change look like? And the change for the upper end consumer is beginning to show signs of stress. Now, whether that's because a lot of the federal workers would fall in that 100,000 plus category, or whether it's something else, what we are seeing is that upper income consumers are increasingly saying that their real incomes are expected to decline over the next year. and their job separation anxiety is actually quite high, particularly relative to kind of lower income cohorts, probably because a lot of the jobs that had been being created were actually kind of, healthcare and kind of other jobs that in many cases tend to be, kind of lower income side of things. And so I think, yes, they're doing fine for now, but there are signs of stress, and ignoring them is something that can lead to trouble.
Yeah, I got to tell you, Drew, I see that anecdotally right now with people who've been looking for jobs, who have been making good money and got laid off, and been looking for jobs for months at this point. When do we, if we haven't already, how does that then manifest in data? We're not necessarily getting it from the government, but how does that manifest in data that investors can react to, Drew?
Well, I think the one way it will manifest itself is a decline in service sector spending, which we have been seeing, at least through the August numbers, which were the latest ones we had before the shutdown. What tends to happen when you have to worry about things, or when people begin to adjust their lifestyles in ways that shouldn't really be adjusted. And by that, I mean, buying a cup of coffee in the morning is not a decision that should really tax most people's brains. Or that they should really think about if they're feeling good about their job prospects or that they have a job. And what we're seeing is people are pulling back on those kinds of purchases. And when that happens, if you're not buying a cup of coffee, you're not going to buy a car. And so we're beginning to see that roll off on the service sector spending side of things. And yes, maybe people are in the upper income tier are still splurging on certain things, or maybe there's a cohort within that upper income cohort that's still splurging on certain things. But the reality of it is, it seems like it's beginning to shift into a kind of a lower growth dynamic. And of course, we can't find any of the data, or we don't have the data to know whether or not that in fact is happening.
Drew, how much of tariffs are a problem, given what we saw today, that there is some leakage in and there may be more coming? It's obviously not what was feared back in April, but how bad is it, Johnny, as Ed McMahon used to say?
And Google that if you don't know what he's talking about, because you should know.
Drew's old enough, he'll know.
I know he will.
I do know, unfortunately, because I am old enough. And
I meant that for the rest of the audience out there in our control room.
I do think we're going to see pass-through. I think it's going to happen. It's not going to be a full pass-through, nor is it going to lead to kind of this wage price spiral type inflation story. It's going to be a one-time adjustment, and the Fed should look through it. I was just complaining to you, Mike, though, what about all the credit card surcharges that I'm now paying for? It seems like everything went up by 3% on top of the 3% inflation rate, because every time I pull out my credit card, I have to pay a lot more to kind of just use it. So I think, once again, it's going to be something that people notice and are affected by it. But one of the things that's actually helping people right now is that gas prices are actually extraordinarily low, particularly relative to where they had been. And so we look at gas prices relative to kind of how much you have to work to get there. So how many minutes of your work life does it cost you to buy a gallon of gasoline? And when you look at it that way, it's actually, quite contained and well below where it had been the last couple of years, which is probably helping people continue to spend.
All right, we're going to leave it on that note. I know we will be continuing this conversation in the future. Drew Matus, thank you so much. Chief Market Strategist at MetLife Investment Management. Of course, our thanks always to our own Mike McKee, TV and radio, international economics and policy correspondent. Hey, coming up next, Wall Street wary of being burned by the Milei trade again. A lot at stake, too, for Argentinians. The Bloomberg Big Take. It's coming your way on this Friday. Carol Massar, Tim Stenovec, and we are Bloomberg Businessweek Daily.
Street. I'm Alexis Christoforous. Stocks rallying to records after that weaker than expected inflation report got investors betting the Fed will not only cut interest rates at next week's meeting, but could cut rates at the next couple of meetings. Strong corporate earnings from the likes of Ford, Intel, and Procter & Gamble also lending support. We've got the Dow Industrials up 535 points, a gain of more than 1%. The S&P 500 also up about 1% or 65 points at 6803. It's first time crossing over that 6,800 mark. mark. The NASDAQ Composite racing ahead more than 300 points now. All three major indexes on track for record closes. Not invited to the party today. Shares of Deckers Outdoor tumbling more than 12% to a two-year low. The company behind the UGG and Hoka shoe brands served up a disappointing sales forecast. The company also expects consumers to be more cautious as the full effect of tariffs come into focus. The consulting firm Booz Allen Hamilton giving back 10%. The company we know relies heavily on government-related work. It cut its outlook for the year after posting lower profit and revenue. And shares of Applied Materials up about 0.5%. The largest U.S. producer of chip-making equipment planning to cut 4% of its global workforce as it copes with a sales slowdown and trade turmoil. To recap, all three major indexes in record territory. The Dow up 535 points. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Alexis Christoforous. That's your Bloomberg Business Flash.
All right, Alexis, thank you so much. Well, it's going to be a pivotal moment for the Milei trade, and nobody wants to be caught on the wrong side of it again. The frantic selling that hammered Argentina's markets after President Javier Milei's party suffered a defeat at the polls last month has left global investors bracing for another potential hit in the wake of the legislative elections on Sunday. He is not, Milei that is, on the ballot this Sunday, though, Tim, when Argentinians head to the polls.
With what's at stake and why this election is important for the future of Argentina and what Argentinians think about the interest and level and support from President Trump and the whole Trump administration. This election and story, it is the Bloomberg Big Take today. With us is Patrick Gillespie, Bloomberg News Buenos Aires bureau chief. He joins us from Buenos Aires. Patrick, Milei's coalition needs to score more than 34% in the upcoming midterm elections to push through legislation to bolster the economy. Polls show support for him is flagging. Is it true these elections really could go either way at this point?
Hey guys, well, I think what's really important is that it seems like a done deal that Milei can secure a third of the seats in the lower house of Congress. That is something that investors are widely expecting. That would help protect Milei's vetoes, which have been overturned as the opposition has tried to push through spending bills recently. But what Milei's team has already talked about publicly is that they're not going to get a simple majority, which is what they would need to pass the deep economic reforms on labor and taxes that Milei has promised both voters and investors who are waiting to see how this vote turns out. So it's really going to be something of a make or break moment for Milei's economic agenda, and of course this $40 billion U.S. rescue package coming from the Trump administration.
If it's not a make, but rather a break moment, what does it mean Monday or come Monday when we think about markets and policy or changes in policy out of Argentina?
Well, we will definitely be looking at how the sovereign bonds perform as well as the currency. There has been market speculation that the Milei administration has pushed back against. Treasury Secretary Scott Bessent has also pushed back against it, that there would be some overhaul of Argentina's currency policy. Investors have been thinking that this is a necessary change because the peso is widely seen in markets as overvalued. If Milei is not able to secure that 1/3 of seats in the lower house of Congress, that gives him something of a legislative shield and negotiating power with other blocs in Argentina, you could see a lot of pressure on the peso and on those sovereign bonds and potentially a policy change. We are expecting Monday or soon after the vote for Milei to overhaul his cabinet. His foreign minister already resigned this week. There's a new minister in place. So we expect a wider change in the cabinet that's supposed to help consolidate power and help Milei build his coalition.
You know, Patrick, we've spent some time this week talking about this $20 billion swap deal this week. And you know, it's not a monolith by any means, but how would you characterize Argentine support right now coming from the U.S. in this? I mean, this is just, how do you characterize it?
Well, I think it's a bit ironic in the sense that if you think about beyond the currency swap line, which is $20 billion, Milei campaigned as a president 2 years ago on dollarizing Argentina, and now he has the U.S. Treasury buying Argentine pesos. So it's a bit of a turn of the tables, but there's three pillars. There's the currency swap line, the buying of the pesos, and the negotiations that are still underway for Wall Street financing of another $20 billion for Milei that are meant to dispel any investor concerns that Argentina can make upcoming debt payments. It's really unprecedented U.S. support for Argentina. But of course, President Trump himself conditioned that support on Milei's party winning these midterm elections.
So then what happens if his party doesn't win the midterm elections?
Right, exactly. So there's been these new conditions introduced that we have to see, and what exactly is defined as a win. Of course, you could look at the national level, but these results are going to be coming in Sunday night, province by province. And of course, in Buenos Aires province, where a third of Argentines live, that has overwhelmingly a huge number of seats. So that'll be a top battleground, and we'll be looking at some of the key interior provinces where Milei now needs to make up the ground that he's lost, because this whole market sell-off and U.S. Rescue package came together after Milei lost the local election in the province of Buenos Aires. So if it's a worst case scenario, of course, the first eyes will be on Scott Bessent and how he reacts, and if the support is still in place.
You know, Patrick, one of the things I think we've been trying to get our head around, I don't want to come off like an obnoxious American, but it's just why is the U.S. singling out Argentina for support? What do we need to understand about the Argentinian economy or its role in South America? What do we need to understand why this is an important relationship and for the U.S. to provide support here?
Well, I think there's two key differences. One is, Scott Bessent called Argentina a systemic ally or something to that effect. Mm-hmm. His word was systemic. And I think it's statistically hard to make the case in the sense that if the Argentine economy collapses, I mean, Brazil doesn't even sneeze next door, let alone the rest of the region. But when you think about the geopolitical relationship, there's a lot at stake in the sense that Argentina has big lithium, uranium, other rare earth reserves, copper, gold. I could go on. So that could be a key concession from Argentina to the U.S. in exchange for this financial support. And then, of course, China. China has a space station in Argentina. China has an $18 billion swap line with the Argentine Central Bank. Scott Bessent has made clear that Milei has to be committed to getting China out of Argentina without explicitly saying what that looks like in real terms. So there's a lot of geopolitical issues on the table, a lot of sort of strategic interest in terms of natural resources here. But from a statistic or economic perspective, Argentina is not systemic, neither to the U.S. nor to the Latin American economy.
And I will say the post that the U.S. Treasury Secretary Scott Bessent put out, Argentina is a systemically important U.S. ally in Latin America, and the U.S. Treasury stands ready to do what is needed within its mandate to support Argentina. All options for stabilization are on the table. That was on September 22nd, so this is going back.
It's a whatever it takes approach, really a Mario Draghi style approach by the Scott Bessent here.
Patrick, on that, is the support from the U.S., I mean, you mentioned rare earths and you mentioned some strategic elements, but I'm also wondering about just the politics of this and the Milei, and just the way that he and the way that the folks around him might be ideologically aligned with the Trump administration. Like they see in him, they see in that something of a kinship.
Absolutely. There's a lot of the ideological alignment behind this financial support, less so than say the economic fundamentals or ties between the two countries. Milei has been a relentless cheerleader for Donald Trump, and Donald Trump is rewarding him with this financial support now. But I think there's a case to make that politically this could be more unpopular than it is financially beneficial, in the sense that Argentines are very weary of another, U.S. rescue, whether it's from Washington, whether it's from the U.S. or from the IMF. That usually comes with a lot of concessions and hidden terms that people only find out about much later on. So politically, people are weary of Washington coming to the rescue for Milei, and of course, this has had a big ripple effect on Trump. There's been beef farmers, cattle ranchers, soy farmers that are very unhappy about the U.S. providing so much financial support, especially during a U.S. federal shutdown. So I think there's a lot on the line, certainly for President Javier Milei, but also as well for the Trump administration, and in particular, Secretary Scott Bessent.
I mean, the cards are stacked in a tough way. I mean, a deep recession early last year. We've seen a tepid recovery in Argentina, and I'm looking at your team and the reporting that's gone out, it says apart from some inflows into Argentina's most lucrative industries, agriculture, mining, oil, and gas, foreign investment has been almost non-existent. If anything, multinationals have been selling off assets and repatriating money. So HSBC, P&G, Procter & Gamble, Mercedes-Benz, and Telefonica, among others. I mean, it's a really tough situation. So people on the ground kind of mixed in terms of whether or not President Milei's policies are going to make a difference? And if not, then, what is kind of the policies that will go into effect?
Milei has not delivered on his pledges to provide robust economic growth in Argentina. He has brought Argentina back from the brink. Annual inflation was near 300%. It's now 30%. Poverty is also at its lowest level in several years. But that's come at the cost of significant austerity policies. Electricity bills in Argentina have quadrupled in the last 2 years under Milei. The job market is still well below the levels it was when he came into office. Retail sales are down for the last 6 months in a row. So clearly, from a consumer perspective, from an employment perspective, the economy hasn't delivered on the policies that Milei did. And I think there's also a lot of frustration with the corruption scandals that he's faced. He's had 3 corruption scandals, both involving him, his sister, and his top candidate in these midterms, and that candidate had to drop out of the race. They all, of course, deny any wrongdoing, but it's dismantled an image of an outsider who's here to, say, drain the swamp. So from an economic policy perspective, he hasn't delivered on the growth, and the corruption scandals have certainly put a big dent in his image.
How is the opposition using that to their advantage in Sunday's election?
Well, they're using I think a multi-pronged strategy. They have come at Milei with strategically timed corruption scandals. They were the ones who leaked this information to the public, and of course the harsh austerity and the unemployment that people are dealing with has only sort of revived a bit of nostalgia among a certain part of the swing population, swing voters in Argentina, that the previous government or Peronist movement wasn't so bad. So we've seen some of the Peronist leaders who are, again, I should stress, are not on the ballot. Some of their popularity ratings have gone up as Milei's have gone down. We can't speak about election polls at this stage, but you clearly can tell that the corruption scandals that were strategically timed by the opposition have had the intended effect of denting him right now.
All right, Patrick, thank you so much. Patrick Gillespie, he's Bloomberg News Buenos Aires bureau chief. Check out our Bloomberg Big Take story. It's on the Bloomberg terminal at bloomberg.com/Big Take. A headline crossing Axios reporting the United States, the USDA says it will not use emergency funds for food stamps. We know with the shutdown, those benefits have run out.
It's 2:40 on Wall Street. I'm Alexis Christoforous, and investors are celebrating that cooler than expected inflation report for September, betting that report is going to pave the way for the Fed to cut interest rates at its meeting next week. The Dow Jones Industrial Average up 534 points now at a record high. The S&P 500 gaining 65. The Nasdaq Composite up nearly 300. All of the indexes are actually at record highs right now. General Dynamics stock in the news. The aerospace and defense company posting higher quarterly revenue and profit driven by increased orders for business jets. Shares of General Dynamics up 1.3%. We've got gold's recent record rally helping Newmont Mining's third quarter sales and profits beat the street, but shares are coming under pressure today after its guidance disappointed. Newmont Mining down 4%. And shares of the Boston Beer Company are higher today after the maker of the Sam Adams and Truly brands raised its profit guidance for the year as it sees fewer headwinds from tariffs. Boston Beer up 2.6%. By the way, Sam Adams has a new beer. It's so strong it's illegal to buy in 15 states. Utopia's 2025 is called an extreme beer with a 30% alcohol volume. It also comes with an extreme price, $240 for a 12.5 ounce bottle. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Alexis Christoforous, and that's your Bloomberg Business Flash.
cash. Yeah, with a name like Utopian or whatever. Like, yeah.
Okay,
it's
you
gonna
ready?
Be a little heady. Yeah, I'm ready. I'm ready for a lot of things this Friday. Interesting couple of weeks. We've talked about Zion's, a couple of regional banks. Zion's tumbling last week. The firm said it was the victim of fraud on loans to funds that invest in distressed commercial mortgages. After the collapse of subprime auto lender Tricolor Holdings and auto parts supplier First Brands Group, some investors said they are becoming concerned about cracks in the credit market. And then, of course, there was JP Morgan Chase CEO Jamie Dimon.
You can't forget what he said last week, that there's really just one cockroach, which some private credit executives saw as a barb aimed at them. Blue Owl Capital co-CEO Mark Lipschultz responded by saying banks should look at their own books.
All right, we've got a view on the distressed market, a specific area. Back with us is Amy Rubenstein. She's CEO of Clear Investment Group. It's Chicago-based, specializing in opportunistic real estate investments, specifically in the distressed mid-sized multifamily sector in mostly secondary and tertiary markets around the United States. She is, lucky for us, in studio. How are you?
I'm great. Good to be back here.
Well, it's great to have you back here. And I'm just curious, big picture, the environment. There's been a lot of stuff over the last week. Tell us about the distress market, certainly the area that you play in. Are there more distress situations / opportunities out there for you?
Yeah, there's a ton of opportunity right now.
Is there always, or is there more than there have been?
I will say when we're in buyer's markets, we see more distress. Right now, we have seen a lot of distress over the last couple of years and continue to see it. Although I think we might have bounced off the bottom and might be starting to come back.
Why do you think that?
Well, I think that the drop in interest rate that we recently had was a little bit helpful. That was only 25 basis points, but what we've really been seeing is that bank spreads are coming in as well. So while we only saw a 25 basis point drop from the Fed, we're really feeling something more like a 100 basis point drop based on the fact that banks are coming in.
That makes it, some situations, not so stressful.
Well, it doesn't
or
help,
does it?
It doesn't help people that have existing loans that might have gone up on interest rates. But as people are refinancing, we are finding a better lending environment than we were about a year ago.
So talk to us about a deal that you've recently done.
So we are doing a deal right now that we're getting a spread. We're actually assuming a loan that is being purchased at debt. So we're seeing a lot of that in the market right now, where you do see distress from people and people are walking away from their equity in order to save their personal guarantees.
And that's more than you saw maybe 3 months ago, 6 months ago?
It happens to be that we've had our last 5 deals that we've looked at have had loans where we're assuming the loan at debt. And the sellers walking away, losing all of their equity.
Why are sellers walking away?
Well,
what are they not able to do that then you can come in and do?
So what this particular lender is doing for us is dropping that interest rate. The lender doesn't want to lose any of their equity in this.
Exposure, yeah.
So they instead are saying, all right, we know that things were a little bit off. We know that interest rates were high. And we know that that seller or that owner was struggling. Here we have a new borrower coming in who's going to be solid, who's going to maintain the integrity of our investment. Let's give them a little break for a little while so they can get through this period.
Are lenders doing that without a transaction going through? Could that seller have gone to the lender and said, look, we can't handle this rate? Can we renegotiate so then you don't have to bring someone new in? You know us.
I do think that happens as well.
Okay.
So yes, I think that's a possibility. And I think that's something that borrowers need to ask for. And I think when they do ask, they're often able to negotiate something with their lender.
Amy, how many of these deals have some kind of private credit in them as well? Or is it separate?
So I think that is the reason that spreads have come in. Because private debt really flooded the markets. And while banks took a step back, I would say over the last couple of years, banks kind of pulled back, wanting to see how the market was going. And then all of this private debt flooded the market, which is what really caused when banks wanted to come back in, the beginning of 2025, they started to enter the market and they saw more competition than they had before. And so then what happened is they started to bring in their spreads. And that's what brings us to have that feel of a much lower interest rate than just that 25 basis points.
So give us an idea. You do work in multifamily. Give us an idea of the types of properties or the regional variations where maybe these deals are happening.
Sure. We have a deal under contract right now in St. Louis, a deal under contract right now in Tuscaloosa. So we're talking about, those are secondary and tertiary markets. We're also in DC, so that's a primary market. So it really depends on where we're finding the right deal.
Where are you not seeing deals because the market is so good?
So some of the places we won't buy are places that got a little bit overinflated. So some of those growth markets that are now starting to show some declines.
Austin, Texas?
Sure. Austin, Nashville.
South Carolina?
Yeah, absolutely.
What about California? There's a lot of questions about the future governor, who that is, a lot of questions about regulations and red tape during the next administration.
Absolutely. We tend to stay away from California right now because we just don't get cash flow there. So that ends up being an appreciation market. And so we never really find that cash flow to be able to go into that market.
So would you go as far as to say, what we've seen over the past few months and just the past week, that, Tricolor, First Brands, there have been knock-on effects when it comes to financing as a result of this, or no?
As a result of?
Well, on any of the real estate financing deals, have what we have seen with these and nervousness within the credit market, has it had an impact?
No, I actually think that we are seeing enough money in the market to be lending. So I don't see that there's an issue of borrowing. I see that there are fundamentals that are still strong, although even in September, I'm sure everyone's kind of watching this drop in rental rates, right? September was that first month where we really saw a big drop, I think 30 basis points in just that month alone. And if you kind of pull it apart and look at it, what's causing this? If you dissect it, you're getting about about 50 basis points drop in lifestyle renters. So renters who are choosing between home ownership and renting, and that probably is coming from people wanting to go back into the home market. You're only getting about 10 basis points of drop in renters by necessity. So you got to dissect that number.
How are delinquencies with tenants right now?
That's an interesting question. We have seen that delinquencies and evictions have been a higher trend than usual, but that hasn't been just as of recent. We've seen that over the last couple of years.
So that hasn't changed at all in the last 6 months or so?
I haven't seen it in the last 6 months that's growing. It definitely is a trend that I think started post-COVID.
Who's struggling? Who are those people in those properties? Just got about 30, 40 seconds here.
Yeah, well, the rents are staying stronger in these C-class assets, but I think it's also that lower income zone that is struggling more than the higher brackets.
Are you talking recession at all, or just no?
No, we're still seeing things being very strong as far as employment. We're still seeing tenants come in that have qualifications to rent.
Well, listen, you're the perfect person to check in considering this environment and the conversations we've had over the last week. Amy, thank you so much. Thanks for coming in studio.
Thanks for having me.
Yeah, great to have you here. Amy Rubenstein, she's CEO of Clear Investment Group, joining us right here in studio. When we come back, a check on the trading day. We've talked about the S&P at a record, but we're going to get into some of the stocks on the move this Friday session.
A lot of them are moving higher today, 0.9% to the upside right now on the S&P 500. The NASDAQ Composite up 1.3%. The Dow up 530 points. That's 1.1%. You're listening to and watching Bloomberg Businessweek Daily.
This is Bloomberg Businessweek Daily with Carol Massar and Tim Stenovec on Bloomberg Radio and Television.
All right, everybody, we're coming up on the last hour of trading here on this Friday. Carol Massar, Tim Stenovec, live here at Bloomberg headquarters in New York City. We're up about 0.9% on the S&P 500 a day, where the S&P has hit a record. Dow Jones Industrial Average up 1.2%. NASDAQ 100, same percentage gain as the Dow, up about 1.2%. Yeah, we're pretty much hovering near our highs of the session.
Yeah, it's somewhat broad-based, 305 stocks moving higher. You do have, let's see, 1, 2, 3, 7 of the industry groups in the green right now on the S&P 500, but energy lagging down 0.8%.
I'm Carol Massar, along with Tim Stenovec. Hey, let's get to some stocks on the move today. With us is Bloomberg TV markets correspondent Norah Mulinda. Norah, good to have you here. Where shall we start?
Yes, happy Friday. I'm looking at shares of Ford. This is the biggest gainer in the S&P 500 right now. That's ticker F, keeping it easy for us there. Seeing its best day in almost 4 years. This is a company really signaling that it'll largely bounce back next year from a devastating fire that we did see at one of the key suppliers that of aluminum for its F-150 pickup truck. Of course, the company also talking about a profit beat here and a boost to production more generally. So we are seeing shares up for double-digit gains right now, but if you look on a year-to-date basis, shares of Ford are up about 41%. So looks like it's a great day to be a Ford shareholder today.
Listen, it's a great interview too by our own team, Matt Miller and Romaine Bostic with the Ford CEO, Jim Farley. I highly recommend everybody check it out on the Bloomberg. I mean, Ford, ticker F, is now up 40% here in 2025. Outperformance in a big way. Yeah, it's not been an easy path, though.
We're kind of doing planes, trains, and automobiles today.
We are.
Let's go to the air and see what's going on.
Yeah, not a pretty picture here, at least for Alaska Air. That's ticker ALK. We're seeing shares falling for the lowest level since April, down as much as 6.7%. And this is after it reported a worse than expected third quarter results. But not only that, they also canceled hundreds of flights, this due to an IT outage. And we know that this is the second outage that the company has dealt with in terms of an IT glitch in the past 3 months. So, of course, you are seeing the street really reacting to this. Shares down about 5.8% right now as we speak. But year to date, stock is down about 32%.
Don't unplug that surge protector. You know, you just don't do it.
Don't do it.
That's the answer here.
See what happens?
See what happens when you unplug the surge protector.
Come on, guys. Be careful. It's so true. Not a good thing. Not a good thing. Let's go to, I got to say, I love my Uggs.
You love your Hokas, too.
No, I don't have Hokas.
Oh, you love your aunts, but they're not part of this company.
They're not.
Not yet. Okay. I'm sorry. No, not even any
On running is a separate publicly traded company.
Completely separate.
Yeah.
Okay.
Right.
So Deckers.
Ticker DEC, DECK. We're seeing shares down on pace to close at the lowest level in almost 2 years, falling as much as 15%. This is because the company reported a weak 2026 sales forecast. We were even seeing, of course, we know this is the owner of Uggs and Hoka, as you mentioned here, but we are seeing Pure on holding, which you called out just a bit ago, falling as well in sympathy. But analysts are really saying in terms of Deckers here that the outlook may be conservative, particularly coming from management here. They're saying that this reflects management's cautious view on U.S. consumer spending amid tariff-driven price hikes. So not that great right now. I mean, especially year to date, if you look at shares of Decker down 56%.
I'm looking at TD Cowen. They cut their price target on the stock. They still kept their buy rating, but cut the price target to 124 a share from 125.
Who was that? Was Needham, you said?
This is
no,
Cowen.
TD Cowen.
Okay, well, listen to this.
By
Barclays,
$1. I don't get that.
Price cuts from Barclays, Needham, Bernstein, Telsey, Raymond James.
A lot.
All today.
Yeah.
So not enough people buying Uggs?
Well, I heard somebody talk about that with Uggs. Yes, there's several pairs at my home. My daughter had them when she was little. They were so great for little kids because you just slide them on. Although I will say that a lot of pediatricians were like, make sure you give your kids real shoes with hard bottoms because it's much better for their feet. Having said that they were saying that, they've become so seasonal in terms of cold weather.
That's fair.
And that when they did, I think, was it Ugg sneakers that they just were really popular, so that maybe their product mix they've got to kind of play around with.
Yeah, I heard they're comfy though. Never owned a pair, maybe but that's what I've been told.
Ugg gladiator sandals. You know what I mean?
Uggs makes gladiator
Those are the
sandals?
ones that you tie up your leg and they're like
they wrap around.
Yeah,
not from like the gladiators.
I've never seen gladiators.
Back in the
gladiators
day.
fight.
Sandals?
Are you not entertained? Yeah.
Well, look at their feet. Look at their feet.
Okay.
The sandals.
Just saying.
An important part.
Making a recommendation. Norah, Mulinda, thank you so much. Check out our Stock Movers podcast, 5-minute episodes of the biggest winners and losers in the stock market at any given time. You can find it on Apple, Spotify, or anywhere you get your podcasts.
If you are long this market, there's some winners out there for you. The S&P 500 up 1% as we speak. The NASDAQ Composite up 1.3%. The Dow up more than 550 points. That's 1.2%.
Yeah, and as you said earlier, if you take a look at the S&P 500, about 310 names higher in the trade, 192 to the downside, one unchanged. But we're getting ready to kick off another couple hours of Bloomberg Businessweek Daily, and a lot coming at you, including what the heck is going on between U.S. and China when it comes, not China, well, that too, but U.S. and Canada. Another really important trading partner. It's been wacky.
There's this ad. We're going to show part of it.
Yeah.
There's the premier of essentially coming at Ontario, coming out and saying that, hey, we're going to stop running this ad on Monday.
It's wackadoo. We're going to get into that in just a moment. Hey, if you're watching on TV, the close is coming your way in just a moment. Tim and I continuing right here on Bloomberg Businessweek Daily.